Hello, guys. This is Vineet from Edge Forex, and we are here about 8 minutes away from this. No, I wouldn't say this year's, but this quarter's biggest event where Powell is going to come out and talk about interest rates and what he's going to do. Is he going to drop by 50 basis point? Is it going to drop by 25 basis points? All of that is going to be clear in another 8 7 8 minutes from now. So I thought, why not to come and talk to you guys while that is happening and we cover that live. And how else to do it other than, be my road to a million family. And that's where I want to be. That's where I want to be. I want to be all the time. Unless, I'm doing something else which is family related or anything. I want nothing more than to spend time and show you guys how to trade, to show you guys how to profit with forex markets. So it's really, really exciting. We are heading towards uh, we're actually heading into festive season. We are in, there are Christmas trees all over the place, festivities in the air. And you guys know where we lean. We are big time bullish on US dollar, and I've been covering that for all my few of my broadcasts for the last few weeks now. So I'm super duper excited, and I can't wait to see what comes out of the Fed meeting today. We are expecting 25 basis point cut, and because now inflation is going up, it's rising, and unemployment is not rising, prices are not rising as much. So no, sorry, prices are rising. For example, inflation is going up, unemployment is not going up, economy is not crashing. It's not going into recession anytime soon. So there is no real reason for the Fed to cut at this point. So I am not expecting, even more like the reason I'm expecting a 25 basis point cut is because they have already kind of committed to it. So they cannot really, back out of it. But what would be a surprise for the market and surprise to a dollar, what is the other side of the trade is if they come out and cut 50 basis points. Or if they decide, hey, the conditions are not severe enough for them to cut and we're not going to cut at all, then the dollar is going to fly. It's going to fly like anything. But we're expecting, because they don't want to spook the markets. They want to keep the status quo. They don't want to spook the markets. I think they are going to keep. Looks like Telegram, the screenshot is not available. Am I audible though? Okay. Okay, let's see what is happening on the Telegram. One second. Just one second, bear with me, guys, because we have a big audience on Telegram, and I want to make sure that they can see the screen as and when I speak, and what I'm showing on the. Hmm. Yeah, you should be able to. How about now? Can you guys just wave if you can see on Telegram? Because it's live, it's showing live on Telegram. Live stream started, yeah. It's on public. Uh, hmm. That's a bummer. People can see on Telegram because we have almost 2,500 subscribers on Telegram that we actually broadcast to, and I would like to for our Telegram family to be part of this event and be live with us. So we're checking with our staff to see if what's going on. So what I'm doing is I'm looking at the chart here of US dollar Swiss franc. Actually, ideally, I want to be looking at the chart of EUR USD because that is the most the one that is affected the most. And I'm going to change this chart from hourly into a minute chart. And right now it's sitting as 104.87, 104.86, 104.87, thereabouts. So let's see how it reacts. So we are 3 minutes away. So let me see if I can also bring CNBC on. It's a last minute thing, but let me see. CNBC live stream. Let's see if we can do that. Move that chart euro. Because that would be nice to see it live. Okay, yeah. 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 Here, you can see here, and let me see.
Up by about 25 basis points, but I think the
Okay.
market's anticipating that.
So
This will
that's what
probably
they're
be
also
a
saying,
meeting
that
that
it's going
kind
to
of
be
comes and
25
goes
basis
without
points.
too much
Let me bring
excitement.
the volume lower a little bit. Yeah. Yeah. Okay. So even these guys are expecting a 25 basis point cut, and as you can see on the, it's docked. Hang on, let me. Yeah. So they're expecting markets to not move too much, and let's see what happens. I am expecting a 25 basis point move, and I'm expecting EU or USD to drop to get lower. And all right, we're less than a minute away, guys. Let's see what happens, and we will know. So we are expecting 25 basis point cut, and we are expecting EU or USD to fall. If it's a 50 basis point cut, EU or USD is going to rise. Here we go. Okay, it is out. Looks like it's out, and as expected. Okay, it is out. Why? Okay. Okay, so your USD is falling. It's going as we expected, but I still don't know. One second here. Okay, it's moving in the direction that we expected. Okay, so here comes the decision. So the market's already moved, started moving beforehand. Quarter point, 25 basis point, exactly how what we expected. And that's exactly we predicted also in the real time that hey, if and when that happens, market is going to drop. Sorry, EU or USD going to drop. That means euro is going to loosen, euro is going to weaken, US dollar is going to strengthen, and that is exactly what is happening in front of our own eyes, in front of our own eyes, live. And that is what I wanted to share with you guys live, and go through this trade live. And I've told you guys earlier in my earlier broadcast as to how we are playing this, how we are short this trade, how we are sell this trade for a very long time now, and how we want to ride this down all the way down to parity. So here we go. So it's 25 basis point rate cut, exactly what we predicted. The market is playing out exactly how we thought it would, and then is falling. Is right now is fallen about 60 odd pips, and I expect it to go about 100 pips or so. So it's gone about 70 pips now. I think it has room to go another 30 pips, and then it's going to stabilize, bounce back a little bit because the RSI is going to go to extremes. And then, so now we want to see what the dot plot is. What is the meaning of dot plot? Dot plot is the future expectations of rate cuts or rate hikes. So I think here, let's go to this guy, see what Leesman is saying. Let me increase the volume a bit because I want to be out of the way here. Let me increase the volume of this guy.
3 years. And one more thing, the more important issue of inflation, where the core PCE is seen up 0.2 to
inflation is going up, so that is not good.
2.5%.
It's not good for rate cuts.
And then it gets down to trend in 2027.
It's playing out exactly how we expected it that it would play out.
Cut, still considering additional cuts, but considering fewer or forecasting fewer cuts than it had been in the past. Tyler?
All right, thank you very much, Steve. Back to you, David Kelly. It looks like you kind of nailed it there, David. You said down to 2 cuts from 4 next year, and that seems to be exactly what they said.
Yeah, this doesn't surprise me at all. And I think what they're trying to do is lay the groundwork
and we
for
had
being
just
able
a
to have
trade
a more cautious approach to monetary easing next year. Right now, there's sort of this lull between administrations. I think at some stage there's going to be some pressure on them from the administration to be more easy. So I think they're trying to sort of put a stake in the ground, saying, "Look, this is what you should expect from us."
I'll show you guys
so
what
they don't,
happened
so
now.
So
let's go to our Discord, and we had an EUR-CAD trade going.
Stephanie,
and
your
that trade
reaction?
closed.
Yeah, I mean,
You
rates have
are
moved a little bit on the back
See,
of it,
that's
but
where
the
you
market
guys
was looking
need to
for the Fed to
understand.
communicate that they're going to slow
We
down their
broadcast
pace of cuts, and
every
certainly
single
did
trade
that.
as and when it happens.
The key thing now is that,
and you can see
if you look on page
here,
12 of the Summary of Economic Projections,
market
that's where you see
conditions.
the risks around inflation, and now it's weighted to the upside, which last meeting it was
close
more
our trade.
neutral. And then similarly on risks in terms of the unemployment rate, it was
trade,
previously weighted to be a lot
close
higher, and
55
now it's
pips
more broadly
and the
balanced.
profit of
the shift of
349
risks have changed
euros
notably, which is why they've slowed down
the trade that just
they're likely
actually
to slow
closed.
down their pace
So we
of
booked a
cuts
profit
in
of
the coming years.
349
Speak to that
euros
point, Jim Caron,
in
about
front of
the-
your
about
own
the
eyes
risks
right as of
on
now, and
both
we
sides of the
broadcasted that
mandate,
trade
as
live
Steve
to you
put it.
guys.
Yeah, so look, I mean, I think that there is
So
a component.
I
of
don't
this,
know
which is
how
the
else, how much
unemployment rate,
more,
right? So
how
the
else we
dual
can be
mandate
more
is full employment
transparent.
and stable prices.
We
so I
broadcast
think what
it
the
exactly
Fed is
when
effectively
we entered
trying
in this
to do
trade.
here by continuing
We
to cut
broadcast
interest
it
rates,
exactly
although it's
when we
slowing its pace of cutting
exited
interest
this
rates,
trade.
is it's really trying to do
We
a risk
captured
management
a
exercise
screenshot
in the
of
sense
when we
that
exited this
it
trade,
is probably more
and the same
worried
thing
that you could get an
happened when we
accelerated
entered this trade.
rise in the unemployment rate
So this
if
is
the Fed is too tight
as
for too long.
transparent
So I
as
think what's
one
behind some
can
of the
get
pace and the
in
directionality
this marketplace,
of
where
rate
it's
cuts
full
right
of
now is
charlatans,
that they're trying to
full
hedge
of
that
crooks, and
unemployment
full of
rate.
frauds.
They need to
And
keep
here
it
we
around
are,
that 4.2%
giving you guys
level. I think if
insight
it starts
into
to
every
rise,
single
it
trade
has
that we
much
book,
more negative
every
effects
single
for the
trade that
markets
we
later
exit.
on. So to me, that's a risk
I don't know,
management
guys,
exercise.
what
That's
else we
why
can
they're
do.
doing
I don't
it.
know what
Very
else we can
importantly, though,
show
the market
you
always
guys
thinks about these things in terms of
as far
sequencing,
as
right? So right
transparency is
now they're
concerned.
cutting by slower. Next thing you know,
So
they're going to pause.
now
and at
it's
what
gone.
point then
Let's
does
go
the
back.
market
Let me
maybe
bring this down.
potentially
So let me
start to
see
price
in the
in
middle
rate
road.
hikes
So
even
on
if
high
it gets to
road,
2026?
we just made
That could have more
350
negative impacts for the
euros
market.
on
We're
middle
not
road.
there yet. But the
Obviously,
point, though,
because
is
the
that I
trade
think it's a
sizes are
risk
so much
management
smaller,
exercise for the
we would
jobs
make
market.
a lot less.
David, just to go back
Anyway,
to
so we'll discuss all the
this
trades and
kind of
things, other
decision,
things
the
tomorrow.
market's
I just wanted to
reaction is a little bit
share
more
this moment with you
disappointment maybe
guys
that this was a
that
little
we've
bit
been
more hawkish
predicting,
than they expected,
and
even
I
though
wanted to
people were
share with you
expecting
guys,
a
show
hawkish
you
cut.
guys
What do you think accounts?
how
Is it the
we
two
think, what
cuts
our
versus four
thought
instead of
process
three?
is.
You know,
And
what do you?
I'm going
What
to
would you
stop
be
the
watching
CNBC
Yeah,
for
I
a
think we
second
just
now.
have
Here,
to
let me
read the
stop this. We don't need that anymore. We know what has happened. So here we are, guys. 5 minutes into the thing, and there's been a 80 pips or 760 pip move. I think it's got another 30, 40 pips to move. And then tomorrow and rest of the week, it is going to fall further. So I hope you guys listened to my advice and took some trades earlier when I said, guys, this is the time. If you're not gone into this, now is the time to get into this. And if you listened to my advice, you would have made 67, 80 pips by now. If you didn't, you know what, guys? It's still not too late. This trade still has legs. And I think it's only going to accelerate from this point on. So, that said, I want to say good night to you guys. I will be back tomorrow. We'll talk in detail about this. There's so much more happening in the marketplace. There's so much more I want to talk to you guys. It's kind of getting late for me. I want to get some rest. And then more than rest, I want to spend some time with my family. My son, he's driving me crazy. He's got his winter vacation now. and he's on my case. Dad, do this with me. Let's that. So I want to give some time to the family because, guys, it's very, very important to give time to your family, to spend time to your family. All this trading is fine. It's important to us. It's very healthy that, yes, we spend our time and energy into making money. All of that is perfectly fine, but we need to give time to our family. Who is it that we are doing this for? We're doing it for our family. We're doing it for so our family can have a better lifestyle than we did. So keep that in mind and make sure we spend that time and money when we make that money with our family to make them happy, to give them the comforts of this world. Because we're putting in the hard work, we're putting in the analysis. So let everybody keep that in mind. What is it that we're doing this for? Who is it that we are doing this for? We are doing it for our family. So cherish that. Spend time with your family, spend time with your loved ones, and share the happiness, share the wealth that we are creating, share the success that we are creating. That said, let's check out. I'll be talking to you guys tomorrow and we'll dive deeper into what is transpiring in our front of our own eyes. That said, we all actually almost 80 pips already has happened. So that said, I will be talking to you guys tomorrow. Good night.